Hello, this presentation will be about the financial performance of Shoe Dash Limited. This is our income statement, and as you can see, our profit is 18250. This is our financial position, and it shows our assets, liabilities, and equity. The year ended 30th November 2020. Our net profit margin is 39.33% and our current ratio is 6.56 to 1. As for Shoe Dash's financial performance, our net profit margin is 39.33%. As a whole, a net profit margin of approximately 10% will be considered average, and a net profit margin of over 20% will be considered good. But of course, different companies of different sizes and industries will have different expectations. So for Shoe Dash, a private limited company, a 39.33% net profit from sales is considered a good amount, and it shows that the business is doing quite well in terms of profitability even though it just started operating for a year, especially during a pandemic right now. An expense to sales ratio of 6% of net sales also proves that Shoe Dash manages its expenses effectively. However, a current ratio of 6.56 to 1 is bad. It's true that a higher current ratio shows that the business is able to pay its day-to-day expenses and short-term debts, but a current ratio which is too high, usually above 2.5 to 1, shows that the business has too much current assets over current liabilities. It's not utilizing its assets efficiently for further investments or to buy more stocks or to maximize growth and profit. The net profit margin may be high due to the low expenses and the increased sales revenue of the shoes, followed by a low percentage of the cost of sales and the inventory. Liquidity ratio may be too high because Shoe Dash wants to retain assets for debt repayment or emergencies like the COVID pandemic or new policies imposed like BC and CO. We can improve our marketing strategies to increase brand awareness by advertising on more social media sites or television, or by implementing loyalty programs to improve customer loyalty and increase sales revenue. Current ratio can be reduced by increasing short-term loans instead of applying for long-term loans like the current bank loan of 100,000, so that liabilities will decrease in the future and the company's burden will ease. The internal users, which are managers, use the financial reports of our company to make important decisions such as whether to continue running the business or not, or whether to purchase certain assets or sell certain unwanted assets. It can also be used by managers to track business performances or come up with budgets. External users such as potential investors use the financial reports to assess the viability of investing in Shoe Dash. They use it to consider questions such as, will I be able to earn high returns? For example, if the income statement shows low or fluctuating profits, it indicates higher risk for investment. Thank you for watching.